holding Bitcoin and having leverage with it is unstable. So you have to allow for a lot of instability in this world. And I think it can be positive, right? It can work to your advantage. And that's why I would recommend people not be 100% in Bitcoin, right? I think, we've talked about this kind of independently, using the Kelly criterion or some other criterion, but you should be something, even if you're mega bullish on Bitcoin, you should be something like 60 or 70% invested in Bitcoin. That's it. You should never be beyond that, right? Never, ever, right? Why? Because if it totally crashes, you're going to want to pick some up. You want to have some dry gunpowder, right? All these things may be true, but you're playing with fire, and you shouldn't play with fire. What you should do is you should take some percentage of your net worth and just put it in Bitcoin and literally not touch it until that thing is 10x.
The volatility and liquidity of Bitcoin are sometimes perceived as chaotic, yet they actually exhibit an intriguing pattern. The price changes of Bitcoin are not random, like a pendulum swinging between extremes. Rather, they are a reflection of the underlying liquidity model that controls its market. Renowned cryptocurrency specialist Fred Krueger delves deeply into the cause of Bitcoin's strong price swings and its implications for the future due to its distinct liquidity structure. For instance, in 2020, a period of extraordinary stimulus sent liquidity into the economy, which helped Bitcoin reach new heights. Time went on, and severe corrections resulted from restricting liquidity. In order to comprehend these cycles, Krueger says it is necessary to examine the ways in which conventional financial systems affect the volatility and liquidity of Bitcoin. From the relationship between global liquidity trends and Bitcoin's decentralized design to its changing function in a world dominated by traditional finance, we'll analyze his main findings in this video. Don't forget to like, subscribe, and turn on notifications for more insightful content like this. Now let's hear what Fred Krueger has to say.
Leverage is going to get you in trouble every single time in Bitcoin. Like everybody who blew up, they all blew up because of leverage, right? That's why they blew up. And I think the only thing, it took me a while to really understand A, Bitcoin, the value proposition, and B, how to play Bitcoin, which is you do not trade Bitcoin. And, I do think that the one thing that gets people is this leverage, and it's just completely unnecessary because, if I don't care how much big your stack is, you really do not need to borrow 2x on it. There's just no reason to do that, right? And it's pretty simple math. Bitcoin can drop 50%. It can, and people are like, well, it can't drop 50% from here because it can only drop 50%. Well, you don't know that. It can drop 50% from anywhere, from any point. You have to have the belief that Bitcoin can drop 50%, and even if it's at the bottom of the support of some model, it can still drop 50%. It's a highly volatile thing, which can drop 50%. So if something can drop 50%, now it also tends to over time go up a lot. It is a very high performing asset, right? But it's an asset that can drop 50%. So if you are leveraged 2-to-1, there is a non-zero probability that you are going to get completely and utterly wiped out, over time. And, it's amazing how many people didn't get that memo, just over and over and over and over again. That, I'm going to dart in and out. I'm going to be smarter. I'm going to wait. Well, you all these things may be true, but you're playing with fire, and you shouldn't play with fire. What you should do is you should take some percentage of your net worth and just put it in Bitcoin and literally not touch it until that thing is 10x. You should not have a situation where all of your money can get wiped out by some wick down. And you could say it'll never happen, but by definition, you need to compartmentalize things so that whatever you're doing, nothing can happen. And whatever you're saying is that black swan, we've lived through enough black swans now to know that black swans happen. And they happen not only with Bitcoin, they happen with finance. I mean, they happen all over the place,
Fred Krueger cautioned that employing leverage when investing in Bitcoin could result in financial ruin and strongly warned against it. Because of its extraordinary volatility, Bitcoin's price can plummet by 50% at any time, independent of support levels or market trends. An investment might be totally wiped out by such a decline with only 2x leverage. Krueger advised investors to set aside a reasonable amount of their net worth for Bitcoin and to take a long-term holding approach without attempting to time the market rather than using leverage to gamble. Citing past occurrences such as the 1987 market crash, the 1990 collapse of Japan, the 2008 financial crisis, and the 2017 and 2022 cryptocurrency downturns, Krueger underlined that market crashes are unavoidable. Caution is more crucial than ever given the current global economic turmoil, which is caused by growing debt and uncertainty. Even for hopeful Bitcoin investors, he advised allocating 60 to 70% of their capital. Krueger emphasized the need of having cash on hand for unforeseen circumstances or discounted investments, emphasizing the necessity of adaptability and caution in volatile markets. Now, let's get back into Fred Krueger's insights and learn how to navigate Bitcoin's highs and lows with a smarter strategy. Don't forget to like, subscribe, and enable notifications for more valuable content.
As a guy's been in finance, what did I see? I saw the October, 87 crash. I was there, I saw the Japan crash, right, in 1990. I was there, floor of Nomura Stock Exchange the day it crashed, the day it peaked. It didn't completely crash in one day, but so I saw the crash of the Japanese market very closely. The great financial crisis crash, saw that, was there, been there, done that, and so, and now you get all the crypto crashes, right? 2017 was there, that 2013, I wasn't big enough that it mattered. It was insignificant for me, but and then 2022, been there, lived through the crash, right? So I've been through all these crashes, and the learning is crashes happen, and so do I think that there will be another crash in the next 5 years? 100%. There's going to be. We are living in a very unstable world, right? The financial world is unstable. $35 trillion in debt is, 122% GDP is unstable. There's a lot of things that are unstable now with this world. So, holding Bitcoin and having leverage with it is unstable. So you have to allow for a lot of instability in this world. And I think it can be positive, right? It can work to your advantage. And that's why I would recommend people not be 100% in Bitcoin, right? I think, we've talked about this kind of independently, using the Kelly criterion or some other criterion, but you should be something, even if you're mega bullish on Bitcoin, you should be something like 60 or 70% invested in Bitcoin. That's it. You should never be beyond that, right? Never, ever, right? Why? Because if it totally crashes, you're going to want to pick some up. You want to have some dry gunpowder, right? Maybe you're going to be able to buy some crazy miner for, a third of the price of the mining equipment. It's, I'm reading this book on John D. Rockefeller right now. And, he got really big in 1872. And there was this crisis in the oil world. And basically you'd walk to these other refineries and he would be like, okay, I'm going to buy you for 1/4 of the cost of your equipment. And people would be like, well, why should I sell to you? It's because you're either going to get that and you're going to grow with me, or you're going to get nothing. I'm going to wipe you out. Your quarter is going to go to zero. So if I were you, I would just sell to me. And everybody did it. And he was right. And they actually did very well. The people who did sell to him did very well because, so, I just think you need to have dry powder and other, and also personal things can happen to you. You can get divorced, you can get a lawsuit, you can get hit by a car, a lot of things can happen to you. So, I mean, we're just living in especially now, we're living in a very uncertain time. And I think you need to plan accordingly.
With decades of expertise navigating market volatility, Fred Krueger's closing remarks are an educational resource in financial savvy. Krueger learned an important lesson from his observations of historic catastrophes such as the 1987 stock market crash, the 1990 market collapse in Japan, the global financial crisis of 2008, and several cryptocurrency downturns. Crashes are unavoidable. He underlined the significance of being prepared for the unexpected in the current world of unparalleled instability, which is driven by rising global debt and economic uncertainty. Citing both the inherent volatility of Bitcoin and the overall instability of the financial system, Krueger advised against having too much leverage in the cryptocurrency. He maintained that even the most optimistic investors should never put more than 60 to 70% of their portfolio into Bitcoin. Krueger also stressed the significance of being ready for any obstacles that may occur in a person's life, such as divorce, legal troubles, or unanticipated accidents. He advocated for a cautious, adaptable approach to investing in an uncertain environment that strikes a balance between conviction and flexibility. His final words are unambiguous. Embracing volatility strategically and being always prepared to turn obstacles into opportunities are the keys to success in both life and finance, not avoiding it. Please take a moment to like this video, subscribe to the channel, and click the notification bell for more in-depth analyses of macroeconomic and cryptocurrency trends. And as always, happy investing.